All right. It is Wednesday, November 4th, one day after election at 10:30 a.m. This is L. Jermaine Russell. Welcome to Stocks and Squats. And I just want to do a quick review over some ways to really like analyze how you will look at your option trading. Change this so they both match. So CRDF is a prostate cancer company that is really doing a lot of great stuff on oncology, really more on prostate, but they're doing a lot of good stuff on here as far as the research is concerned. Um, Today, because of how their chart was looking for the past couple of days, I've been holding it since Friday, and mainly because if you look at his stock price chart, you can see, back here on Friday, I believe this was Friday the 30th, or it was either I think I bought on this day actually, not this day, right? I think I bought on that day. I think this was Friday, but essentially, there's a bullish engulfing pattern that was formed here, right? So that's what brought me to the attention of CRDF. I already knew it was running before, but this is something that I wanted to make sure. And yep, I bought it here at $1.50 per contract, right? So you see that there's a stock price chart and then there's an option chart, right? So I did not know anything about this whatsoever. That there was two different charts for, one for options, one for the stock price itself. So once I found out, it was like, okay, how do I find this on the platform? So what you do, sorry. So what you do is you go to your trade tab, right? And once you're on your trade tab, what you do is you get a whole option chain of what the stock that you're looking at, or looking to investigate. And when you're here, you will see the delta, the gamma, the theta, the vega. I kind of, I guess maneuvered it into my own way so I could see what's going on. I want to know what the mark price is. So right now it's at $2.15. The size per bid and ask, right? So it's like 40 or the 205, and then 3 at the 225 on the bid and ask. So typically I would have sold this already, right? But I know that it has a little bit more room to run. So I'm waiting for it to get over $3, right? And why would I say that? I want to know the liquidity. The liquidity of this stock is really not that great, right? The volume is pretty bad, 267. So when I had that mindset originally, there was a lot more volume in here. This was coming from yesterday, right? So yesterday was a whole lot more volume, so I already had the assessment that, hey, I could sell it near 3, if not above 3. So since it didn't do that, it kind of just went up to about 250 and then hit a wall and came back down. So how do I get the actual chart to show, right? So what you do is once you find that you're looking at an option, right, an option chart, I should say, or option chain. You see that you like a certain option chain because of its delta and its gamma. Um, and I have a delta of 57, a gamma of 7, and the theta is 6, right? So the theta is really the time decay, right? So because that it would take 6 cents every day that I hold this stock, I don't particularly want to hold it too long, but I know that's not a horrible decay because my delta is still 57 now, right? It's 57, and every time that it crosses to a whole new dollar, so let's say that this goes to 3, once it crosses that whole new dollar, it adds 57 cents on top of that. So what you do is to get this chart to show is you right click, right, and what I'll because it's already shown on the actual chart. So like you see this right now, right? That this is the chart for the calls are 17.5. So we're calling 17.5 on this chart. That's the contracts that I bought. $17.05. They're saying that by November 20th it will get there, right? Um, so right now we're currently in the money. It was trading at about $18, but it's not anymore. So it's okay. It's still like where I want it to be. But let's say I don't want that one, right? I want another contract. So what I'll do is I right click. And once you right click, what you do is you can send that option chain to a chart, right? So what I typically do is that I label the chart that I want. So I labeled it, or I linked it to 9, right? Just like over here, I linked it to 2, because anything that I click on, or any chart that I click on my watch list, it will come up to here so I can see his chart. So that's the same thing that I do here, and I'll show you. So if I click, let me just move this over a little bit. So this is my watch list. I have my watch list right here. And let's say this is a stock that I sold earlier, which was LI. I probably shouldn't have sold it so soon, but that's besides the point. So when I click on it, you see it's linked to 2. 2 comes here, and I'm ready to go to start analyzing my chart. So I click on CRDF. CRDF comes over here, and now I'm ready to start analyzing the chart. Instead, I look at the option chain itself. In the option chain, I'll right click on the 20 calls for November 20th. All right. So what I'll do is I'll send that to the chart so that I can be able to analyze it. And then here you go. Yes, it might look relatively the same as the chart that you just saw that I had for the 17.5 calls. That's because, you know, it's the same stock. It's not like it's a different stock. It's just that it's a different option contract. So, you know, when you're looking at these option contracts, and when I listen to my man Carmine, he's saying, you know, make sure that you get a delta above 30, right? Because you really want to get more bang for your buck. So and I believe that he's right. But also you want to look at the volume. You want to look at this liquidity, because see, this volume is 48, not the best volume, right? Even though that this is at 200 and something, like, that's still not the best volume. You want something in the thousands, right? The open interest is in the thousands. So that is pretty good. But if the volume was in the thousands, that would be even better, right? It's kind of like LI. I got in on this because, right? And if I just held it a little bit longer, I would be probably a little bit more. But if you could see the volume, thousands, the open interest in the thousands, it gives you more opportunity for this liquidity to start running through the chart. So you're not just through the stock. So you're not just holding on to dead weight, because that would be the worst thing to do, is to hold on to dead weight. So here, even though it's not at the volume that I would like, I know that the chart itself says that it will go up. So I'm gonna just put this back to the option that I'm currently on. So you see, right click, send. You're sending this this contract to whatever you link it to. I picked 9 because I felt like it's much closer to here, and when I'm moving around analyzing, it's easier for me to come to 9. So I come to 9. I send it to the chart that I designated it to. So it's at the chart that I designated it to. If you look at this chart, and this is where technical analysis really does matter, where you would be able to identify that this was a bullish engulfing candlestick pattern, right? So you would have seen this setup already, and then say, hey, let me look at the options. So when I bought here, it was green on the day, right? So I bought here, I bought at $1.50. The next day it pulled back, which is fine. It does that. And then yesterday it held green. Today is pulling back a little bit. You know, it's like I sold too soon on one and held too long on another, right? So I sold too soon on LI, which could have made more, and then I sold too soon. Well, I sold too soon on LI, which I could have made more, and I held too long on CRDF, which, you know, that's neither here nor there. That's something I can well, it is here or there. It's something I will reconvene on another time, right? But essentially, you look at this bullish candlestick pattern, and you can see that hey, it has an opportunity to go up. So the same thing here. Let's just zoom in a little bit, right? Same thing here. You're seeing that this engulfing candlestick pattern it has formed. So now the only thing it could do is just kind of gap up, and when it gaps up, it's going to make a new high. And anytime when a stock creates a new high, typically it pulls back, right? That's just what it does. It will pull back, and then we'll see if it will go a little bit higher after the pullback. So here with the MACD, we see that the momentum has shifted. This is another reason why I didn't sell the stock yet, because the momentum has shifted from bearish sentiment to now bullish sentiment. So I really don't have a real reason to sell. I know that this 1751 is support, and what it was resistance is now is support because it broke through, and anything below that I want to say about 1650 is the next support down. So I definitely don't want this stock coming down on me. So sometime today I might look to sell it, right? But let's dive a little bit deeper. If we move to the hour chart, and this is my level of progressions, right? I go from the year chart to the hour chart to the minute chart. On the year chart, we see that we have this hanging candlestick here. And that's actually kind of similar to what's going on over here on the day chart of the option chart. So now when I come to the hour chart, which it looks like it's coming down, we see that we still get this hanging candlestick, which is fine. I don't mind it because one, we still have this cross here, and it's still showing that there's bullish sentiment. Same thing here. We had that there was a cross here, and it's showing still bullish sentiment. So even though that this candlestick is hanging, we see that there's bullish sentiment, and then we see that the relative strength is now no longer overbought. It kind of just came back a little bit so that it's not overbought, and we can get more buyers to come in, maybe for the next hour, not this hour particularly. Well, then we'll see that there could be more upside, right? So let's look onto the minute chart. Now, when we go to the minute chart, we see that yes, it could come down to the 1677 area. And then when we come to the minute chart on the option chart, we see that not only did it cross and show that I was actually trying to sell it in here, but it went too fast. Like there was just, so that's another reason why having liquidity, having a lot of volume is important, because you will have low volume, and then you will have something like this happen where it just come down too quick and you can't really guard against it. And so we see that this stock actually, like I said, it came into now bearish sentiment. So it has an opportunity to pull back, which I can see it doing. I can see this pulling back some. After it pulls back, where on the options chart, it might come down to this lowest resistance of the RSI, right? If it comes down here, like it's doing right here on the price stock chart, comes here, usually this is the point where it bounces and goes back up, right? And the reason why I figured that it will bounce and go back up is because it's not near its 200 SMA. The 200 SMA, if it was trading below it, that would give me even more of a reason to sell the stock on the minute chart. But I'm not going to do that. This is something that I would prefer to hold. So because I see that it's oversold on the stock chart, this gives me a greater impetus to let me know that it can go to this 1767 area, which is the 20 simple moving average, the 20-day simple moving average. This green line, which is at 17.4, is a 5 exponential moving average. So the 5-day exponential moving average. So, this kind of gives me a gauge of where the price could go in relation to this 200 SMA, in relation to the MACD in relation to the RSI. So as we see here, it's starting to find some movement to come back up, right? So when that happens, you want to see if this MACD starts to cross. Once this starts to cross, recognize that it will retest, or at least attempt to retest, the high of the day. The high of the day was 1831. This is pretty much also the all-time high, right? So we know that this all-time high is not overbought yet, or on the day chart, it's not overbought. Actually, when I go from the minute chart, I typically go straight to the hour chart. So when I go to the hour chart, we still see this hanging candlestick. Go to the hour chart here, still see this hanging candlestick. But we go to the day chart, and we see that this is still showing bullish sentiment. So I have really particularly no reason to sell this stock, right? There's no news that says, hey, you should sell this. And even though it's a hanging candlestick here on the day chart, the options still at least the stock still has room to run up. So as the stock still has room to run up to go higher, there will be hopefully more traders coming in to buy more of these contracts. So that's that for the CBRF. That's how I actually analyze it. And then you'll see these lines here. If you have these lines on your graph, I don't know how you have yours set up at all, but you will also have a theoretical option price. The theoretical option price is like in theory where the price could go, and we're saying 240. That's in theory. Also, I still have the 5-day exponential moving average, which is highlighted here in green. Right, so you'll see exponential moving average. All you have to do is just right click the line, so you can see what it is, and then you'll have the open interest. What is the open interest? The open interest is the price that people are interested in. So I just want to make sure that it's actually highlighted, because sometimes, okay, it is. Yeah. What is that? $1.43? No. Up here, open interest says $1.93, right? I don't know what this one is. What is this? Oh, that's a 20 simple moving average. Okay, sorry. So on the 20 simple moving average, we see it says $1.43. On the I want the open interest. I'm looking. There we go. See, this part is a little difficult, and like I said, I'm still learning. So you see me going through it with you. And the open interest, wow, still not showing the price itself for the open interest, but that's fine. See if I can try it again. Show me. Nope. Doesn't show me still. That's okay. No. So we know, like if I were to highlight over here, that the open interest is around $1.64. So those who are interested in this stock want to get in at $1.64 or so. Right. So these are probably technical terms that you're not very familiar with, but if you do a little investigating, a little bit of reading, you will see that it's not that hard. It's just really a matter of just taking the time to understand how options work, because once you see that there's an underlying price for that stock, then you'll see that, hey, this stock has is technically sound. It can move higher, and it has things in its favor, whether it's news, momentum, volume, such of those things. So hopefully this helps. I know I probably went around and around a couple of times to hopefully that you can understand the option, but it really is just a matter of you taking the time and learning and reading and educating yourself, right? If you once you educate yourself on what is going on with options, then it gives you a better chance of dealing with the actual chart. So just like here with LI, like I said, it created a whole new high, right? Um, when the market opened, it started to pull back. So that was the only reason why I sold, which I shouldn't have because I knew better. I should have known that it was going to consolidate before going up a little higher and creating a new high because it pulled back after creating its new high. Its high, previous high was right over here at 24, I think it was 30 or so. So once it created its new high, I knew, hey, it has the opportunity to pull back, which it did. Electric cars in China. This has been the gatekeeper for a lot of us as traders, right? Um, which one did I buy? I think I bought this one. Huh. So just like I showed you before, yep, this is the one that I bought. As you can see my prices in here. I sold it way too soon, like the whole dollar too soon. Right, I sold it at $2.60. I was buying this at $1.85. The 3 contracts. It's still, I can't beat myself up for having such a, for getting in at a good price and selling at a good price. But you know that when you see a chart that tells you, hey, bullish engulfing candlestick, previous is about to retest its all-time high, and it didn't do it yesterday, but it does it today, and it gaps up. Maybe you should let your runners run, and that's what I did not do. I said I was going to review this on another day. I'm doing it now. So I'm here with CRDF. As you can tell, it came back down after being at 250. I'm still going to hold it. It should cross back over to twos, if not next hour, sometime today, and we'll see it go higher. All right, because of this bullish engulfing. That's pretty much it. If you can study the bullish engulfing candlestick pattern, I'm guaranteeing you will increase your profits so much more. It's been exponentially helpful to me. So hopefully it can do the same thing to you. So I gotta run. I went in 25 minutes. I have yoga in 5 minutes, but I want to make sure I got this video out to you so you can be able to do some education on your own. So remember, don't follow other people's stocks unless you do your own research, right? I was told about CAR before, and if we look at CAR, I keep on saying I'm about to go away, but if we look at CAR, now look at the volume. Horrible, right? Maybe the 37 calls because it's in the money right now. But out of the money, one out of the money, 42, 17. I wanted to buy this stock long time ago. I was like, oh, I want to buy this after I was told about it by my frat brother. I wanted to buy it, and then there was nothing that was convincing enough to allow me to buy the options contract without being in fear of what it could happen or what could possibly happen. And when I actually thought about buying it yesterday, this is what happens today, right? So I'm glad I didn't get in because I would have been pissed at whatever the contract price would have been at by the time it fell down here because it was so illiquid. So this is what I'm talking about with illiquid stocks. You got to be, or illiquid, yeah, even illiquid stocks, illiquid option contracts. Be careful. So trade smart, be hungry, and study.